Hello everyone, it's me, the Boss Hog, with another portfolio update as of the week ending the 30th of June 2023. I also thought I'd use this opportunity to do a half-year review and actually fix some mistakes, both in terms of my portfolio and in terms of sort of lifestyle, health, etc., etc. Let's discuss and let's do it. All right, so we're going to start with target updates, and I guess I should first of all explain that I'm very sunburnt at the moment. I was out with my sister in London today and seem to have caught it. I was kind of surprised really, but it is what it is. Anyway, before we get on to portfolio updates, I wanted to talk about my target updates. At the start of the year, I set myself a bunch of targets, both in terms of wealth and financial, and actually a bit more broadly. And I started to realize actually that my wealth and financial targets are broadly going quite well, but my non-financial targets are not going so well. And I think because of the fact that, the week, the month, the quarter, the half year all finished so nicely on the 30th of June, it was kind of a good opportunity for me to review. And so I just kind of wanted to spend a little bit of time on that to start with. So in terms of my financial targets, the plan remains to retire at 55, which is 20 years away, with £5 million. The next milestone is 500k, which originally, when I was working on all this stuff, was to be hit by the end of January 2024. Now, in fairness, I think I'm going to miss that realistically, and it's partly because the way that I set all of these targets was based on sort of long-term performances of the stock market, and a lot of my wealth at the moment is tied up in stock markets, both in terms of my ISAs, my investments, and also my pensions as well, are all basically tied to the stock market. So actually it has been recovering quite well this year, but obviously last year was quite a bad one, and so we're a little bit behind as a result of that. But still, I think it's important to sort of stick with the original plan, and I'm assuming that in some years when the stock market's very strong, it's going to overperform, and in others, it's going to underperform. That said, though, it was a really strong month with a significant jump between May and June in terms of overall wealth. Basically, everything went up. It was also quite good as well because I recently remortgaged and did an equity release, and as part of that, I got my home revalued. So that was good to sort of get that almost crystallized. I didn't sell it, of course, but this is what the bank was willing to lend me, and it was done by a third party rather than just sort of benchmarking that I've been using before. So that was good as well. So that's the updated home equity now takes that into consideration as well. And then broadly speaking, we're just continuing with the plan of trying to put as much wealth in as possible. So this year, the target is to basically add 70k into our wealth. It's a little bit complex to explain because basically some of this wealth comes out of my wife's gross salary. So the lines here about pension tax for both myself and my wife is really like a kind of rebate that the government gives us for private pension contributions. So there's an element of that as well, where it's actually not our direct contribution, it's sort of employer as well as the taxman is contributing to this as well. But still, overall, the plan is to add 70k across the year. We're running quite far ahead at the moment, but we've actually got a couple of costs like service charges are due, and we also would like to go on holiday and a few other things as well. So I'm sort of, I'm very happy with this number because we're definitely running ahead, but we're not quite running ahead as much as this would indicate, and we're only about 10% ahead, which is still pretty good, and I'm very happy with that, to be clear. And things are definitely moving in a really good direction. I would say that over the last sort of 6 weeks, I put very little money into my and my wife's ISAs. It's mainly because I think the stock market's really expensive at the moment, especially the US one. And also now, like, I have an opportunity where I'm sort of trying to build some cash, and so I've been adding to sort of my non-ISA investments effectively. But really, what you see there in terms of cash savings, that 10 grand, is typically what I would have put into the ISAs originally. But again, I'm trying to build up my cash reserves at the moment, and I've got effectively a very high yielding savings account as a result. So the plan here, by the way, is still to max out my ISAs by April 6th next year or April 5th next year, basically to make sure that we're taking advantage of the tax breaks. But at the moment, I'm fairly relaxed about the fact that we haven't deposited anything at all actually over June into our ISAs, and we've only done about 6.5k out of 40k in that target. But again, we're staying nice and flexible, and I think it's a fine thing to do with the cash situation. So in terms of the situation with financials, honestly, I'm fairly happy. The most important thing here is the 70k target, which is within our remit and something that we control. I'm relatively relaxed, even if we do miss our sort of next milestone target of 500,000 by the end of January. Again, I think there are fine and understandable reasons for that. So relatively relaxed in terms of that look. Then I sort of looked back at what I wanted to achieve this year, and there are 7 non-financial targets. So outstanding at work, basically getting the highest level of achievement that I can. This is really a reflection that I did get outstanding at works, and then over the last sort of few years, mainly to do with childcare, to be honest with you, like a new baby is incredibly disruptive. You know, me and my wife just haven't been able to give as much to work, and you know, like we both were on quite a steep trajectory career-wise, and I think like myself especially, I sort of plateaued a little bit, maybe coasted a little bit for the last couple of years. And so for me, it's like, you know, me and my wife feel like we're getting our lives back on track now. Our daughter is 3.5, so things have started to sort of stabilize. And so I wanted to sort of do a little bit more of the kind of what I think I'm capable of at work. So this is basically like outstanding is the highest achievement level I could get for things like my bonus, my feedback, etc. I've been in my new job for 8 months. I joined a telco as part of sort of a finance department, wider finance department shake-up. So my boss, the CFO, has only been there about 3 months longer than me as well. And broadly speaking, I'm happy with my performance so far. I'm very confident in the fact it's at a good level. I have a good relationship with basically everybody I work with, and I feel like I'm adding value, which for me is quite important. And you know, I've got a bunch of big projects going on at the moment, so I feel like busy and a little bit stressed, but kind of in a good way. And etc. So I'm fairly happy. I don't personally think I'm quite good enough yet to get into the outstanding level, but again, I've only been there for 8 months, and things are moving in a positive direction. So you know, I basically had to do a like revamp of my team and put in place a lot of things that weren't there before. And now I think we're sort of nearing the part where we'll be able to become a high performing team, and I will become a high performing individual as well. So that's exciting for me. Benching 100k here, I mean, this got off to a really good start. Like I was like benching like 70k, 72.5 sort of several times as well, not even just one, which is really the target here. But then between sort of March and June, I was really lax on my gym, and up to a couple of weeks ago, I hadn't actually been for like several months. So I've been a bit disappointed with myself, really. I don't really have a good answer as to why I haven't done the gym. I kind of was like getting quite into it. And then I just didn't keep up the routine, unfortunately. So I just kind of need to get back into that routine. It's hard to get going on these things. I'm sure sort of people can relate. But actually, I do kind of enjoy the gym. It's just the actual getting there component that can be a little bit challenging. Next one is video in Polish. And to be honest with you, this seems quite unlikely. Like I haven't put any attention into learning my Polish. And especially now I've got like a bilingual daughter. I think it's something that's kind of needed because like her Polish now is at a level where it's challenging mine, I would say. And in some cases, like future tense, her Polish is better than mine. So yeah, I think here, like I want to do a video in Polish, but I'm not necessarily sure that this is the right approach. Like this is almost like a vanity objective, I think. And I think I need to change this objective. So, and really sort of revisit what the purpose of this was meant to be, which was to sort of give me more confidence and actually help me to get better at Polish. And I'm not necessarily sure doing a like financial video in Polish should be the ultimate aim here. Like I guess one day that would be a nice thing to do, but actually it should be more about just regular study and getting myself more confident and better, kind of listening and speaking Polish in particular. So yeah, I also want to publish a story. I mentioned this when I first did this, so especially when my daughter was little, I used to make up stories, and I kind of stopped it between the ages of, I don't know, 1 and 3. Just because like she seemed too big to need it, and I wasn't really asking. But recently she's been like asking me to, you know, do story time and stuff. So we're just making up stories, and I think it's a good opportunity for me to maybe like work on a bit of a side hustle, potentially a second income stream. And actually I do kind of enjoy it as well, like as a creative outlet. Like I do think I have a little bit of a creative urge, and part of me does that with cooking, which I really enjoy, and I think I'm a pretty good home cook, honestly. But there is an element of sort of storytelling. I also like make up little limericks and things like that. My wife loves them. I just like randomly make up like limericks and poems and stories. But yeah, I think for this one, I just need to be a bit more focused and documented on it. Like I think I've actually got a couple of really good stories. One of them especially my daughter loves, about like a weather dragon. So yeah, I think I just need to put a bit more work into it. I have previously like looked to understand what the concepts are of getting hold of illustrators and things like that, and I maybe need to do a little bit of work on sort of AI generative art to see whether that's something as well to consider. But yeah, so this one I think I can do. I just need to focus on it a little bit more and come up with a plan, basically. The next one, in terms of family duties, this is like a bit of a wishy-washy objective in a way, but again, I think like I've always been pretty good at sort of focusing and being a dad. I'm kind of quite conservative as a man in many ways and like traditional, but actually I do kind of take the more modern approach to being a dad. I really enjoy it. I get heavily involved, and you know, I think it's rewarding and an important job. So I think basically from day one I've been pretty hands-on as far as these things, but like me and my wife were like talking to each other like, you know, a year ago in like relationship maintenance, and both of us were basically focusing all of our attention on our child, which is pretty important obviously, but it's very easy to sort of forget each other. So you know, it's just one of those things where we wanted to get better. Both of us actually sort of committed to doing various things. My wife, for example, commented that I would regularly buy her flowers in the past, and for the last couple of years I haven't done that. So, you know, we've now started to do that again. So that's just like little like signs of love and like acts of service and things like that, right? Like making sure my admin's kept up to date and stuff, and those kind of good things as well. But actually, like I think we're, as a family, in the best place that we've been in probably since our little one came along, and probably even before that. Actually, like pregnancy is quite demanding as well, especially on a woman, obviously. So this one feels really good. I'm pretty much happy where we are at this objective, even though it's not especially specific in terms of it. I think I'm okay with that. Then the YouTube channel, like I think I'm pleased with the fact that I do a near weekly finance video, like portfolio update. But again, I think it could be a little bit better in terms of like some of my company reviews could be a bit more detailed. But again, actually I have done like some pretty deep dives recently, and I'm pleased with that. I think here I would like to do the odd additional video during the week, especially when a couple of big projects come to an end at work. So yeah, I'm going to think about that. If anyone has any sort of requests, etc., feel free to put them in the comments or message me on Discord. But I have some ideas anyway, so I'd like to basically do sort of a Tuesday and a Wednesday video, or sorry, Tuesday or Wednesday video, just about stuff. But yeah, to be determined. And then 2 hours a day reading. I mean, I do read quite often, but it could be a lot more targeted because it's mostly newspapers, sometimes like New Scientist as a magazine. And I have read 3 books this year, which has been pretty good. But I think it could be a little bit more structured, basically, in terms of like, what am I doing? Like, is it that valuable to me to read newspapers? Not really, especially because I read like 3 a day normally. So yeah, I think that one is okay. Like, I guess technically speaking, I'm like broadly speaking achieving the objective, but it doesn't necessarily. I think it goes back to like the video in Polish. It's like, what's the purpose of this objective really? So I need to sort of revisit that. Anyway, having like spoken about those updates, I kind of had a couple of observations. The first one being that actually 6 months review is too long. Like a lot of this stuff has drifted for longer than it probably should have done. Like not having public reviews where I come onto YouTube and talk about this stuff, it basically means I'm less likely to hit these targets. Like, I mean, I've been investing now for almost 3 years. I started sort of toward the end of 2020, I guess that would make it. And, you know, part of the reason why I've been able to keep up that is because of the fact that, like, I'm a very prideful person. So, like, coming on here, keeping up the routine, like, not doing anything stupid or, well, we'll see in a second. I have made a few mistakes. But, you know, basically trying my best with the portfolio stuff has kept me honest and kept me focused. And whereas, like, this stuff I don't really talk about on a regular basis at all. And so I just kind of forget about it or focus elsewhere. And then lastly, I think some of these are quite difficult to measure. I probably need to revisit them, frankly. So I'm going to propose a couple of changes, which is like, I think my financial goals remain solid. I'm really happy. And I think, like I say, it's been helped by the fact that every week, more or less, I come on here and talk about them. And because I don't want to look like an idiot, you know, I take it pretty seriously and etc. And I think it kind of like the purpose of my YouTube channel is not really monetization or anything like that. It was always to keep me focused. Like that's why I don't do clickbait thumbnails or clickbait titles or anything like that. Like it's great if I get a subscriber. I always enjoy it. I enjoy comments, etc. as well. I like talking to people. But actually, the main focus here is to keep me honest, and that's kind of been achieved in a way. But again, I need to do the same with non-financial goals that I'm doing with financial goals. I think as well I need to like tie in targets with wider aspirations. So we touched on video in Polish already. And yeah, I think I want to change this, and I'm going to change it in the mid-year, which you normally shouldn't do with targets, but I think it makes sense here. And instead, I think I should be doing like regular study. So I was thinking of doing like 2 hours a week, 3 hours a week. We'll see how it goes. But I did recently sign up to something to help me, so we'll see how that goes. And then yeah, I'd like to actually do proper study and like progress. Likewise with the reading, it feels really arbitrary. Like I'd like to sort of have a better goal in mind in terms of what I'm hoping to achieve from my reading. This one I'm not 100% exactly sure yet, but like again, reading 3 newspapers a day is probably unnecessary, right? Whereas I'd much rather read, like, is the reading meant to be like increasing my knowledge? And I think ultimately that's what I wanted to do. Potentially it could be an escape as well, right? So maybe I should do some like philosophical reading or physics reading, like something away from more of the investment side. I'm not sure. Excuse me. But yeah, I don't think that ultimately 2 hours reading, you know, Metro, Evening Standard, and City AM is necessarily like the best use of my time. So I think I need to revisit that a little bit and understand what I'm hoping to achieve and have more targeted and beneficial reading from that. And then lastly, I think the goals need to have better targets, even with the like family duties. Like maybe I need to think about that. Although we already have in the background sort of an informal situation where, you know, one day every weekend we'll have like a family day, and then the other day is sort of free time, and me and my wife have a good split in terms of sort of responsibilities and when we look after our little one and stuff. So it's kind of, it is there in the background really. So maybe just for that particular point is okay. But some of this stuff, likewise, like publish a story, like that probably needs to be bite-sized and broken down a little bit. I've called them mini targets. I don't know if there's an official term, but some of these are a bit like too long. Even with like the bench 100 kilograms, right? If I'm currently doing like 72.5, maybe I could do 80 as a single one at the moment. But again, like I probably need to think about how I go about getting to 85, 90, etc. because it's quite a big jump between 80 and 100 at the moment. So, and general fitness could also be better as well. So I might add one or tweak this aim a little bit, because, you know, I've lost like barely anything over 6 months and I don't feel as healthy as I have done in the past. So again, I think I could refine this a little bit in terms of the aim. So I think that's the changes I'm going to make. You'll see, I guess, from next week's video that we'll introduce some of these changes and we'll start talking about these things a little bit more. And hopefully, because I know that that discussion is going to happen in the future, I'll be sort of not putting stuff off during the week, right? Because I know in a week's time I'm going to have to come to you guys and tell you whether I've been successful in enacting these changes or not. But that's part of the purpose of this channel and these videos. So, you know, it's a little bit of pressure on me, sure, but it's kind of necessary pressure to kind of help me become a better person. So that's ultimately good and what we want to be going. So again, hopefully you guys will keep me honest, and as a result, I'll keep myself honest as well. Anyway, I just thought that was a useful half-year update. And now let's talk about portfolio update. Okay, so again, we're going to keep with this format. I think it works. So changes since last updates. As mentioned, no deposits. We continue to focus elsewhere, basically, in terms of building our wealth. Fine. In terms of dividends, it's been pretty solid. Because I have half of my position in UK stocks, they tend to pay twice a year, and typically the first of those payments will be sort of May to the end of June, maybe even July, and then the second one will be sort of September, October. So an interim and a full dividend. So we do tend to have pretty good sort of mid-year periods as well. And actually a few of our dividends are still to arrive, specifically Huntsman and DLR, which were paid on the 30th but haven't yet hit my account. I'll start with the good news though, which is that we got a dividend from my REIT ETF. So this is now actually pretty solid yield when I look at it, and I think I put it right back in. Let me just remind myself, yeah, I put it right back into the stock. I'm down, but only very slightly, as we'll see in a second. Like REITs had a little bit of sympathy this week, and so this ETF position is up a couple of percent. I remain red, but only very slightly, and I've been buying a lot more of this more generally. Then we move on to one of my largest holdings, which is Gamma Communications. So this was basically 10p across 1,400 shares, so a really significant dividend. Also got reinvested, as you can see at the bottom there as well. Very happy to continue buying Gamma at these levels, despite it being a big position for me. Amkor is an interesting one because between Amkor and Gamma, they're basically my 2 largest positions, and there's quite a big gap between third as well. I don't think Amkor is the steal that it was. Like it's not going to have a tremendous EPS this year, even accepting that a majority of its EPS is going to be in half 2. It also had a bit of a run up this week for reasons we'll discuss in a second. So actually, I decided to not reinvest my Amkor dividend. I'm up like 40% at these kind of levels, even against some unfavourable foreign exchange. And although I think that Amkor should be a little bit higher, I think there's basically better opportunities elsewhere at these current levels. So I decided to not reinvest this. Next up is my ETF for the Netherlands. Now, I'm generally not super optimistic on mainland Europe, but I really like the Netherlands for a number of reasons, like, good English, high education, liberal outlook. It's also got some great companies in here as well, and it's kind of a very focused ETF. It's basically the largest, or the focused 25 Dutch companies. So yeah, this is a relatively small position for me, but again, yields pretty solidly. And I will be reinvesting in this, but I got the dividend very late on Friday afternoon, actually after the markets had closed, so I couldn't buy this share. So you'll see this buy next week, but I basically got like £7.83 in cash in one of my ISAs at the moment. Next up, we've got T Rowe. I'm modestly red on T Rowe, but I'm very comfortable buying with T Rowe. I think it's a good company, and I'm pretty sure it's just going to follow the rest of the economy up as it recovers. So to buy at these kind of levels feels pretty good. So yeah, just a reinvestment here from this perspective. Next, we move on to the sells, and I guess like part of the reason for my title of this video was to address basically my failings in my non-wealth aspects of my goals. But the second one was to talk about Polymetal. So I'm kind of being forced to realise a very significant loss on Polymetal. Basically, they are delisting from London, caught up in sanctions, basically. And this is a Russian and Kazakhstan focused gold and silver miner primarily, and my haircut on this is really large. So basically I'm writing off 5,000, about 5,300 to be more exact, and selling the remaining 850. So yeah, I think here like the mistake, I think maybe a couple of mistakes. So first of all, with Polymetal and EVRAZ, which I still hold because that's even worse. I can't do anything with EVRAZ even if I wanted to. It was a case of not giving enough weight to political situations. Like I would caution anyone else involved in sort of China or Russia or Africa or those kind of places, and it's weird because I sold out of things like Alibaba, I sold out of Sentiment as well, and as an African focused miner, just because I was kind of uncomfortable with the risks politically, but for whatever reason I was just a bit blind to the Russian risk, basically, for want of a better word. And I definitely didn't give it enough consideration. Like both Polymetal and especially EVRAZ were and still are profitable businesses that, yeah, I felt fine putting quite large percentage of my portfolio in. When I had, before Polymetal and EVRAZ crashed in terms of share price, about 10% of my portfolio was between these two companies. Since then, I have added capital, etc., etc. But I'm still looking, £5,000 here and about £4,000 on EVRAZ. So yeah, really significant and not giving that enough consideration. Also as well, the purpose of both Polymetal and EVRAZ was to be a hedge against commodity price increases. But maybe this wasn't really the right approach because it sort of ended up being completely counterproductive where, my hedge sort of backfired entirely. And even though like in theory, commodities are meant to be a good hedge for inflation, the way that I was hedging in what effectively is at least a medium risk asset probably isn't the right approach. And then lastly, I don't think I was guilty of this, but I think it's worth discussing just to make sure I don't have a blind spot. Like EVRAZ in particular and Polymetal as well, both had like huge dividends. And like a lot of the time when you see things with big dividend yields, like it looks attractive, especially to new investors. And obviously, I'm still a relatively new investor myself. And they're not always so attractive, right? Sometimes the share price is beaten down for a reason, and sometimes like you can look past those reasons for an attractive return. Like, and I kind of like think it's like Vodafone would be an example there. I would call out immediately. Also, if you want to take the bearish argument for Medical Properties Trust, which is again a pretty significant holding for me even after the fall. Likewise, like this is like a high risk play, right? Sometimes share prices are beaten up unfairly, and the market's overreacted to something, and there's a very good opportunity there for you as an investor if you're buying individual stocks. But other times you need to be careful about that. So like I would say I kind of think I learned my lesson, but I haven't jumped out of MPW, so that's an interesting one. Whereas actually I did jump out of Huntington Bank shares, right? So again, I still remain optimistic on US financials, banks specifically. But here I like sort of spread my risks across, an ETF rather than just focusing on HBAN, which is actually still below the price I sold it at a couple of months ago now when all of that stuff started kicking off. So I feel like I maybe pivoted correctly, whereas here I probably didn't. So I think it sucks basically. I had to sell this. I would have been delisted in like 3 weeks' time anyway, forcibly, and I wasn't sure what was going to happen then. So I wanted to sell whilst I could, even if it means basically sort of being 85% down on my position, which is gross to even think about. And yeah, I mean, although I have a reasonably big portfolio, like $5,000 to me is quite a lot of money. And you think about what that $5,000 would have done over 20 years. It's very painful because that probably would have like quadrupled in a relatively normal long-term situation. So it does feel really gross. But it is the nature of buying individual positions, right? I've had other positions where I've gained $5,000, and here we have a position where I've lost $5,000, and yeah, there's no easy way to deal with that. It's sort of it's pretty disgusting, and we'll just have to try and move on as best as we can, basically. So at least I'll no longer have to look at it in my portfolio, and yeah, it's gone. Next up, I decided to do a little bit of selling on a position that had gotten quite large, and like I do want positions, like I like small caps, and by small caps I mean like not penny stocks on the whole. I like kind of the businesses in sort of the $500 million to the 5 billion kind of level. I've kind of operated in businesses of that kind of market cap a lot, so I think I have good understanding of what I expect from them. And I find them the most interesting. Like, it's a good balance for me between my risk levels and my sort of targets. But I decided to sell more or less flat, technically slightly down, but it was interesting because like the stock price itself was higher than I was buying, but then I've had like unfavorable FX movements. But you'll see in a second, like I deployed this into another FX, into another dollar ETF. And so effectively from my perspective, like the FX impact here is neutral, and so it felt like I was making money even though I technically wasn't. But yeah, this was sort of just a rebalancing where I was kind of like, I think this is more or less up with events, and I felt like it was a good opportunity to buy elsewhere. And then I decided to sell Digital. This is something I've been thinking about selling for a little while. This is basically an email specialist company. I overbought it basically for £1.15. So again, another like £100 loss here. But I've just become, I just think the share price is, again, up with events. I also think there's a lot of sort of companies and technologies that's going to challenge this business, and I don't really think it's big enough to survive by itself. So the dream situation here for Digital, if someone comes to buy it for, 125, 130, I can definitely see people being willing to do that. But ultimately, I don't think the business is distinctive or special enough to be like a MailChimp, or to be, like a competitor to, say, Pinpoint from Amazon. So I think this is, I just decided to sell it. I've been thinking about selling this for a while. It's a very small position and it's not really a core thing for me. And I just decided to put my money elsewhere. So again, probably a mistake, but a fairly mild one, just overpaying for sort of an average kind of stock. Ideally, you don't want to overpay for anything, but at least overpay for a really good quality stock. Here, I just don't think it's strong enough to basically survive in the long term. And yeah, there is a situation here where people see a big jump and I'll be like, oh, damn, if only I'd held it for a bit longer. But again, I'm fine to realize my mistake and move on with my life. And then in terms of my buys, so Fidelity Special Values here, this is basically my UK focused value proposition. Again, I think there's quite a lot of value, honestly, in the UK at the moment. So I think some of it's trash, to be clear. But also, again, this kind of reflects my approach where I'm basically buying a fund and having exposure. And there's some good positions in here that I do think are really good value. Then we have this company, Throgmorton, which I find really hard to pronounce. Sorry, not company, fund. But this is like my high quality UK position. So this is the one with Gamma, Games Workshop, and a few others as well. Actually, 2% holding it had in Decra Pharmaceuticals recently got bought. So again, I think there's a lot of buying opportunity at the moment in UK stocks. But for me, it's an opportunity to build in both of these positions. So this is where my Polymetal sale ended up going, basically split between these two. You can also see as well here, I put my Amkor dividend here, and then my Digital sale into Throgmorton again as well, which is my preferred of the two funds. But again, I'm growing them sort of at a fairly similar pace for that reason. Then in terms of my small cap sales, they all went over here into my REIT ETF, so including the one where I got my dividend from. And again, I just feel like at the moment that REITs are a little bit overbeaten up. I kind of get it because of the high interest rates and the fact that we're all going to have to like refinance our debt. But again, a lot of them have like favorable situations. I think situations with their tenants, I mean, in terms of like rent increases, that sort of stuff. I actually also like so Prologis, their largest position here is about 12% of their fund, is a good one. And generally speaking, I've become more bullish actually on both office REITs and supermarket REITs, which feature relatively prominently in TREAT, this ETF. So again, I sort of on balance, I just think the sort of the feeling in the market's a bit too bearish on REITs at the moment. And again, although there are some definitely risky REITs, including MPW, for me, it's a good opportunity to buy. And then the rest here is just dividend reinvestments in terms of Gamma and T Rowe. So that's the situation over the last couple of weeks. In terms of dashboard, honestly, a pretty good couple of weeks, but it's been really volatile. It's been like all over the place, as you'll see in just a second. But right now we have this 142 more or less thousand, not quite at an all-time high, but pretty close. And then our P&L at the moment at 11.5. Again, this is actually quite far behind our all-time high, which was in early February this year. But we're making pretty solid progress, and I'm pretty comfortable with how things are looking. In terms of our graph here, so again, nearly an all-time high in terms of portfolio value, as we can see. We did fall slightly further behind the S&P benchmark. I basically am just struggling to keep up at the moment with the tech pull of the S&P. I do have 40% myself in tech, but again, it's just so dominant. It's difficult to keep up. Plus, I also have a sort of concrete around my ankles at the moment with my half position in UK stocks, which aren't doing so well. And honestly, if it wasn't for Games Workshop doing really well over the last couple of weeks, I think my blue bar here would be even worse. But you can see here, like pulled away from the yellow bar, so the FTSE 350, which had been performing quite well because of its sort of defensiveness and commodities, financials. And actually a weak pound, which tends to be very good for multinational FTSE 100 companies when they convert from foreign earnings back to pound. Now the pound is like really strong, which is sort of, again, a bit of a challenge for my portfolio as well. And part of the reason why I remain very relaxed about this is because I think at the moment the pound is just too strong, and it's only being supported by the fact that, you know, the Bank of England has been very slow to act and needs to increase the base rate a lot more. And that's really the only thing that's supporting the pound, in my opinion. So I'm sort of expecting the pound to reduce in value, which is good for my portfolio. And really, like, I think the pound is sort of about 10%, maybe even slightly more ahead of where it should be, which would add, you know, so much to my portfolio that it would then put me quite far ahead of the red line. So ultimately, I'm sort of looking past this particular graph and actually feeling perfectly fine keeping up more or less with the benchmarks here, even though, again, it's a challenge just where the S&P's been so strong this year and the Nasdaq even stronger, right? Then we've got our portfolio over time. Again, I'm hoping that this becomes more interesting to look at, you know, in 10, 20 years time, when a lot more of my portfolio will be from growth and from dividend reinvesting. Right now, a lot of it's very capital heavy because I started quite with a big bang, more or less. And this is a really interesting graph as well. And again, this is sort of what I touched on over the last couple of weeks. You know, went down and then went back up again. And but UK stocks really haven't recovered in the same way that US stocks have. So that's a pretty interesting graph. And again, you can see here, like, this is all the impact of like Polymetal and EVR. This big drop in sort of February, March last year is when that happened. So there are some pretty big movements, and the first one being Amkor, which became my largest position again. It's sort of battling out between Gamma at the moment. Gamma hasn't had the best sort of 2 years, I would say, but sort of seems to have solidified somewhere between 11 and 12. But at 11.50 and then at Amkor going back up to 30, Amkor's now back on top. Amkor was sort of the beneficiary of two things. First of all, the wider semiconductor space was pretty on fire, but actually more specifically the AI sort of hype. Like if you look at Amkor's earnings this year, you know, it's in a similar situation to Micron, where I think the share price is actually kind of ahead of where it should be, because, you know, it's like Amkor's is pretty cheap, which is maybe a difference between it and Micron, and why I haven't sold any Amkor. Because I think that when Amkor does recover, it's going to be like an incredibly cheap looking stock. Like when I was buying it, it was trading at like 8 PE. So when it's like a 6, it was crazy. But then Amkor also was rumored to be working very closely with Nvidia on their chip packaging of AI chips. So that was really what underpinned it. It got caught up in what I think is a bit of hype at the moment. And even though I have like a kind of 12-month target of $36 for Amkor, I think of $30. If I was like a more short-term investor, I'd be tempted to take a little bit of profit at this kind of level, because like when you look at their earnings, you're looking at like 20 cents a quarter for the first 2 quarters of the year. So it looks really expensive on that basis, even though overall they're still sort of expecting like, 250 across the whole year. Although I'm projecting a little bit there because Amkor themselves only go 1 quarter in advance because of the nature of their business. But yeah, I think that's, that's my position on Amkor basically. I think it's got caught up in the hype. I do really love it for the long term, but right now I wouldn't be jumping into this because it seems slightly ahead of itself. But again, at the same time, if you do want sort of a dividend growth company that I still don't think looks super expensive, then yeah, I still love Amkor. Gamma I like as well. Genius here continues to sort of do good. It did have a couple of earnings analyst upgrades, and I am hoping that they continue to basically execute, because this is now actually starting to pull ahead as my third position. It's sort of, pretty far ahead of SMT, which itself is kind of recovering. I'm still quite red on SMT, but it's moving in the right direction. And Games Workshop here is looking really good for me at the moment. I'm like 30% green, and really optimistic in the direction of travel here, to be honest. But again, I wouldn't be buying Games Workshop. Like, I think this is like a 115, 120 kind of share price, and therefore I think there are just better values to be had. Saying that, it is absolutely throwing off cash. It has honestly 30% net profit margins are some of the best you've ever seen. And it has, like its own universe. So it's literally its own moat. It's its own company, its own like fantasy figure. It just dominates the kind of genre from that perspective. So I can still see why people would want this for the long term, but I think you would want to wait for this to be a better buying opportunity. In terms of other things, especially major movements here, I would call out Huntsman as well. Like, I think Huntsman actually is pretty cheap at the moment. It did sell off some of its business, one of its forearms, and it's like the market hasn't quite responded to this yet. So that's interesting. It has also been buying back shares as a result of winning a legal case against a competitor, as well as the fact that it received some cash from the business that it sold, which was like the lowest margin part of the business. It does also continue its strategy of basically moving downstream in the production process, where it believes it has more pricing power. So yeah, I think like Huntsman is an incredibly necessary company that most people don't know about, and it significantly underperformed the sort of industrials and chemical sector over the last year. It's down like 5% or so, or 2% across the year, whereas the competitors are up like 15%. So I think it's looks quite cheap at the moment, and just by pure coincidence, I happen to have a very similar price, so $36. That I also have for Amkor there, again, pure coincidence. But I think here you could, if you take my position at least, view this as a little bit undervalued. I know other people prefer like Albemarle and things like that because of sort of lithium exposure and those kind of things. I could get that as well. But yeah, for me, I kind of like the exposure that Huntsman has basically in some of their markets. Last one to talk about here is DLR, just because it moved quite significantly. But honestly, I couldn't find any reason for this outside of sort of, again, a little bit of REIT love, shall we say. But again, it's a bit of a dead cat bounce at the moment. Everyone's still hating on REITs. But I'm starting to sort of warm up to the idea that maybe, interest rates won't go too much higher. And again, a lot of them have favourable agreements with tenants that I expect them to be able to execute on, basically. Redrow here at least had a week of stabilising. I'm pretty red on Redrow at the moment, although it's quite volatile. So I have been like anywhere between minus 20% and green over the last year or so. But this is similar. Like, it's just expected at the moment that with interest rates that house affordability decreases. But again, I like my position specifically in Redrow. And then Digital, but I don't want to spend too much time talking about them just because we've sold them now, and Polymetal similar. So we'll remove these from our table next week. I just want to finish off by talking about my sector breakdown. So ETFs are gradually growing over time here, and I expect that to continue.
What I then do with my ETFs is basically break them out as best as I can. So when I do this, technology remains about 40%, and I'm happy with this, broadly speaking. We're also looking to add to sort of healthcare, to a few other things as well, non-discretionary ideally as well. But yeah, we'll see as well. I'm not sort of super focused on that at the moment, because instead I'm trying to build my REIT slice a little bit up further. Maybe even as high as 10%, honestly. We'll see though. We'll see how I feel over time with the direction of travel there. And then lastly, in terms of my dividends, it's going pretty well here. Like June for me actually looks like a really pleasing month. Like I haven't been a traditional investor in terms of dividend growth or things like that. So I've been like making changes to my portfolio, doing a bit more trading in the early days, had a different focus on like high dividend yields in the early days, and now I sort of finally reaching stability. So I think sort of this year will be a foundational year for me, where we'll start to build on a more what you would expect to see with gradual increase, sort of going right and up. But at the moment it's very clunky, and May last year I got a couple of special dividends and things like that, so it's difficult to compare. But yeah, really pleased with the quarter, to be honest with you. And again, we're like halfway through the year here. We should definitely exceed 2022, even though if anything I've actually reduced my dividend yield and focused on positions that are more cumulative rather than dividend focused. And the only thing I'm just going to end with here is in terms of my projections, it's slightly below my June projections. There are really two reasons for this. First of all, I included DLR and Huntsman dividends into my June expectations. And then secondly, I've also sold out Kingfisher, which I originally had. This is a UK coin. You can think of it like Home Depot or Wix if you're in the UK. Or what's the other one in America? Home Depot, and I've forgotten the other one now. But yeah, basically it's a similar kind of business to that. So I decided to sell and take some profit, but originally I was expecting the dividend from them. So again, this is broadly fine, and I sort of expect July to actually slightly overperform, as about £70 in DLR and Huntsman will catch up as a result. So we'll see. Then we have a quiet August before sort of some of the more UK positions kick back in again in September and October. So we'll see how they go. Anyway, I think that's everything I have to talk about. Any comments or anything like that, normal place. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck for your investing. Bye for now.